Hello, everybody. This is George with the Harmony Trading System, and today is October the 6th, and we're going to go and talk about the three trades that we took today. We had one stop, one profit, and one break even. It was very interesting, a directional market, and there was a big trap that the market put. So we're going to talk about how that trap happened and how to look for that type of thing, kind of going forward. So looking forward to the review. Let's do it together. All right, guys. So, the day started with the market ran up at the open, the cash market open into that 780 level. So that, around that 780 to the 95, the market extended itself. Then it started to give us our first pullback into harmony zone number one. And that zone was shaped up in and around this area. So we took that first one, an entry of 3 contracts, a little bit of a fluctuation here, and I decided that I want to take out that trade for break even, and ended up taking that trade around break even. I overfilled on one of the exits, so I covered here, but the net result is about break even on that. Now, the market on the 200 NT Rinko reversed. So reversed meaning completely reversed. And that's the setup in which the trap started to build up for the market. But at 702, the market sold off into that level, 702, and then ran up toward the 780. Okay, so back up to that 780 level. And this is where, the trap happened. Is that follow-up candle around 9 o'clock into 9:23, the market sold off, and almost we were about 4 points away from closing this current candle on the 200, which by them closing it at 702 would have resulted in what we call a captain setup short, which is a consolidation breakout pattern. And that would have been extremely significant on the 200 NT Rinko. And if that happened, we would have been testing the 600 and lower price action. So we talked about that in the room, and you could see the live stream on YouTube for the full discussion that we were having around that price. So the market made one more rotation here, and I took that rotation in anticipation, be honest with you, of the 702, and the market quickly stopped that idea. And that was the beginning of the big trap that rolled over all the shorts in this rotation, because the shorts did not see this one coming. Okay. So we took that stop, then the market just literally kept going, established a harmony wave long, a cloud long, came and retested this level. We were about two ticks away from getting filled long on that rotation. That would have been sweet into that run up. And then we kept going higher and higher on pullbacks. And this is the part that I really kind of want to discuss with people, is a market that looks like this and it runs up into a resistance level in this area. It's natural for the majority of the traders to look at it and say, hey, listen, look at this. I'm running into the 886 and you came from 700. So you're telling me 160 points, right? 160 points or so, 180 points, and you're not going to stop and reverse and consolidate at least. So the thought process of the majority of traders, hey, listen, let me start a short position here. Okay. And that's where the issue is the market tends to trap these people even further. And the way they roll them over is by running the highs to trigger their stops, and that gets the market to speed up directionally in this area. So it is not unreasonable to be looking at this zone right here that we're looking at and say we have one attempt, second attempt, third attempt, four attempts, and you're coming to it again. Okay, so at least we should be seeing a rollover of 50 to 75 points to retest the breakout and to retest the Globex price, which is 14,853.75. Okay, and that is where they really tightened up the screws on the traders and rolled them over in a massive way into the highs and broke that. And I wouldn't be surprised if we get here, they're running it up a little bit, then they reverse it. Okay, because that would be the typical behavior. Okay, but the key is I cannot get in front of it. I almost have to look at this 200 NT wrinkle and let it reverse, because once it reverses, you get this. Once it reverses, it gets this. Sometimes you get a reversal and a reversal around that middle of the range, but we're way above the middle of the range. So any reversal here will be significant, and you will get a little bit of traction on the short side. We're not there yet, okay? But that is the trap. They started the trap right at that level around the 702. They needed to close it. They came in so close to it, and it was kind of nasty how they did it. Just like literally, boom! I got stopped out on that order, and then it never looked back after that. So when the 200 NTU Rinko is long like that and the 100 is long, that is a sign for me to avoid the shorts and actually to look for pullback as a buying opportunity. Okay, and that is basically what I've been looking to do throughout the day and throughout the session. I had a couple of attempts, good attempts, and I moved my orders around so I didn't get filled up on the orders that I had. But we had the right idea. Then eventually I ended up catching this trade right here. And actually the zones are still active right here. So we got into harmony zone number 1, and that zone is that 2875 by 1875. Harmony zone number 2 is 03 by 93. We got in, then the market produced a captain setup long, so that's a buy signal right there. Then they shot up into the run up. I actually ended up getting 4 contracts out of that. Took some of it early, and then the last contract was to the tick at 46, which was really nice to have. The market came back and retested that zone again, gave a switch trade, and now we're spending some time consolidating again. Okay, so as long as we continue to trade above 15,010, these pullbacks are buyable on tests, and you have a swing trade that's looking for the next target of 15,078.75. Okay, so the key to the trap is whenever you see the market really trapping people to that extent and running into a resistance area where you would know the majority of the traders will start getting antsy and start establishing short positions, be very mindful and have very, very tight stop. And the fact that the 200 and the 100, the harmony system is telling me don't go short at all. Wait for an actual reversal before you jump in. That saved me from exhibiting that same behavior that actually got the majority of the traders wrapped up in shorting this massive move and getting blowing up their accounts, basically. Okay, so that's how we ended up doing. And so far the day is not over, but this is where we're at negative 260, and for the week about $2,000, and that's what we ended up doing. Okay, so that is it for me. And Monday we will be off for Columbus Day. We have the bond market closed, and that typically affect liquidity. So we're gonna just kind of call it an extended weekend, and we'll be back on Tuesday. See you guys on the next one. Precision is a decision. Always trade in harmony, and have a nice weekend.